people spend their entire lives running from the very thing the wealthy quietly run toward: debt. Not because debt is evil, not because debt destroys lives, but because almost nobody was taught the difference between debt that consumes you and debt that builds you. One turns people into workers for the rest of their lives. The other turns people into owners. And that difference changes everything. There are people waking up every morning terrified of bills, terrified of interest payments, terrified of numbers on a screen that seem to grow no matter how hard they work. And then there are people who wake up with millions in debt while becoming richer every single month. Same word, different reality. One person borrows money to escape pain for a moment. Another borrows money to buy time, buy assets, buy systems, buy freedom. One sinks, one scales. And the world never explains the difference clearly, because the moment you understand it, you stop playing the game like everyone else. Welcome to this audiobook. Why Debt Makes the Rich Richer, or as some quietly call it, debt that makes you rich. This is not financial advice. This is education, perspective, awareness, a deeper understanding of the psychological and economic system shaping modern life. In this audiobook, you're going to understand why the wealthy think differently about money, why banks treat rich people differently, why most people stay trapped in cycles of survival, and why leverage became one of the most powerful tools in modern history. We are going to talk about fear, control, ownership, assets, attention, the emotional weight of monthly payments, the hidden psychology of consumption, the difference between buying status and buying power, and most importantly, we are going to talk about the invisible line separating people who work for money from people who make money work for them. Because here is the truth nobody says loudly enough. The poor fear debt. The middle class manages debt. But the wealthy master debt. That sentence alone could change the trajectory of a life. Because most people are not poor because they lack intelligence. They are poor because they were emotionally trained to avoid the very tools the wealthy learned to control. Think about that carefully. From childhood, many people hear the same warnings repeated again and again. Stay out of debt. Credit cards are dangerous. Loans will ruin your life. Just work hard and save. And yes, reckless debt destroys millions. But there is another side to this story nobody teaches in school. A billionaire rarely buys skyscrapers with cash. Major corporations rarely expand using only savings. Investors rarely wait decades to accumulate enough money before making moves. Why? Because time matters more than cash, and leverage bends time. That is the game. Not greed, not luck, not magic. Leverage, the ability to control something valuable without paying the full price up front. The wealthy understand that money sitting still loses power. Inflation quietly eats it. Opportunity passes it. Time weakens it. So instead of asking, "How long will it take me to save enough?" they ask, "How fast can this asset produce more than the debt costs?" That question separates entire financial destinies. A consumer sees monthly payments. An investor sees cash flow. A consumer buys to feel successful. An investor buys to become stronger. A consumer asks, "Can I afford this?" An investor asks, "Will this pay me back?" That is the psychological shift. And once your mind sees it clearly, you can never unsee it again. Because debt itself is not the trap. Emotional spending is. Undisciplined borrowing is. Borrowing for appearances is. Borrowing to impress people who are drowning themselves is. The system punishes emotional consumers and rewards strategic owners. And the painful part is this. Most people spend years financing symbols of wealth instead of building wealth itself. They finance luxury before stability, image before assets, validation before freedom, a car payment bigger than their investment account, designer clothes with no ownership, vacations funded by stress, a lifestyle rented from the future, and slowly, silently, their future becomes smaller every year, not because they are lazy, but because modern culture trains people to consume before they build. Scroll through social media long enough and you begin to feel behind. Someone bought a new watch. Someone upgraded apartments. Someone traveled to Dubai. Someone posted another perfect life. And what happens next? Pressure, comparison, impulse, emotional spending disguised as self-worth. People borrow money not to build freedom, but to temporarily silence insecurity. That is one of the most expensive emotional mistakes on earth, because debt amplifies who you already are. If you are disciplined, debt becomes leverage. If you are impulsive, debt becomes chains. And the bank does not care which version you become. It profits either way. That is why financial literacy matters more than income. There are people earning 6 figures living paycheck to paycheck. And there are people with average incomes quietly building ownership month after month. Because wealth is not only about how much money enters your life, it is about what that money is instructed to do. Most people command money emotionally. The wealthy command money strategically. That difference creates radically different futures. Now listen carefully. This next idea may disturb you at first. The bank loves financially undisciplined people. Loves them because emotional borrowers create endless interest, minimum payments, late fees, long-term dependence. But disciplined borrowers, strategic borrowers, they use the bank's own system to accelerate growth. And suddenly, the relationship changes. The borrower becomes the operator. The loan becomes the tool. The asset becomes the worker. This is why understanding psychology matters more than understanding numbers, because money multiplies behavior. If somebody lacks patience, more money exposes it. If somebody lacks discipline, leverage magnifies it. If somebody needs validation, debt becomes dangerous. That is why true wealth begins internally before it ever appears externally. A calm mind builds wealth differently than an emotional mind. A patient person buys differently than an impulsive person. A focused person sees opportunity differently than a distracted person. And we are living in the most distracted financial era in human history. People are overloaded with information, but starving for wisdom. Everyone wants fast money, fast success, fast luxury, fast status. Nobody wants slow ownership, but slow ownership quietly controls the world. A small property, a tiny business, a boring investment account, a modest system producing income month after month. Not exciting, not viral, not flashy, but powerful. The wealthy often look boring before they look unstoppable, because real wealth compounds silently first. That is why some of the richest people in the world do not look rich at all in the beginning. They delay applause, they delay lifestyle inflation, they delay ego purchases. And while everyone else spends to appear successful, they acquire assets quietly, one by one, brick by brick, hour by hour, decision by decision, because they understand something most people never fully absorb. Freedom is purchased long before it becomes visible. And debt, when controlled intelligently, can accelerate that process. Imagine 2 people. The first saves for 15 years trying to buy an asset in cash. The second studies carefully, acquires financial discipline, uses leverage responsibly, buys the asset earlier and allows time itself to begin compounding. Who wins? Usually the person who understood time, because the greatest wealth machine on earth is not income. It is ownership combined with time. That is why the rich obsess over assets, not applause. Assets. Things that produce, things that grow, things that work while they sleep. And this is where most people become uncomfortable, because ownership requires delayed gratification. And delayed gratification feels invisible in the beginning. Nobody claps when you skip unnecessary spending. Nobody celebrates disciplined investing. Nobody notices quiet financial restraint. But 10 years later, the results speak loudly. And that is the irony of modern life. People sacrifice long-term freedom for short-term appearances, then wonder why anxiety follows them everywhere, because deep down they know they bought symbols instead of strength, and strength matters, especially in uncertain times, especially in a world changing this quickly. Artificial intelligence is transforming industries. Entire careers are shifting. Automation is accelerating. Attention spans are collapsing. Economic pressure is rising globally, and in times like these, ownership matters more than ever. Not only ownership of money, ownership of skills, ownership of attention, ownership of systems, ownership of your emotional state. Because debt without self-control becomes destruction. But debt with vision becomes expansion. There is a reason the wealthy spend so much time learning, studying markets, understanding incentives, watching trends, because information changes how leverage behaves. An uninformed person enters debt blindly. An informed person enters strategically. One reacts emotionally. One calculates patiently, and patience may be the rarest financial advantage left in modern society. If this message is already shifting the way you see money, pause for a moment and really sit with it. Not emotionally, honestly. Ask yourself one difficult question. Have you been using money to build freedom, or using money to escape discomfort? Because your answer explains more about your future than your salary ever will. And this audiobook is only beginning. Because next, we need to talk about the hidden emotional war almost every person fights with money. The war between survival and status. The war between appearing rich and becoming free. The war that silently controls millions of financial decisions every single day. And once you understand that war, you will begin seeing the modern world completely differently. Dear friend, we are just starting to work on this channel, so your likes and subscriptions will greatly help us grow. Don't be indifferent. Thank you. Chapter 2. Most people are not financially trapped because they lack opportunity. They are financially trapped because they were emotionally trained to confuse attention with success. That sentence alone explains why so many people feel exhausted while appearing successful online. Because modern culture rewards visibility before stability. It rewards the image of wealth before the construction of wealth. And the dangerous part is this. After enough exposure, people begin borrowing money not to improve life, but to protect identity, to maintain appearances, to avoid feeling left behind, and that emotional pressure has created one of the largest invisible financial prisons in modern history. A prison with luxury branding. Think about how early it starts. A teenager sees expensive sneakers become social status. A young adult sees lifestyle become identity. By the mid-20s, many people are already financing symbols they cannot truly afford because deep down, they believe appearance equals value. A nicer car means respect. A luxury watch means importance. A bigger apartment means success. And social media amplifies this illusion every single hour, because online, nobody posts the anxiety. Nobody posts the sleepless nights staring at bank balances. Nobody posts the credit card debt. Nobody posts the stress behind the image. They post the highlight, the arrival, the filtered version. And millions compare their behind-the-scenes reality to somebody else's performance. That comparison becomes emotional pressure. And emotional pressure creates irrational financial behavior. This is why some people increase income dramatically, yet remain financially fragile. Because income without emotional discipline only upgrades the level of spending. The habits stay the same. The insecurity stays the same. The need for validation stays the same. Only the numbers get larger, and debt quietly expands underneath it all. But the wealthy often operate differently. Not always, but often. They understand something emotionally mature people eventually realize. Attention is expensive. Silence is profitable. That is why many truly wealthy individuals move quietly for years. While others announce every purchase, they acquire systems. While others upgrade lifestyles immediately, they increase ownership. While others seek approval, they seek leverage. Because ownership creates options, and options create peace. The ability to say no, the ability to leave toxic environments, the ability to think clearly without desperation, the ability to survive economic uncertainty without panic. That is real luxury, not logos, not applause. Peace, a calm nervous system, freedom from constant financial fear, freedom from needing every paycheck immediately, freedom from living one emergency away from collapse. And ironically, many people trying hardest to look rich are furthest from that peace, because the world trained them to chase the appearance of freedom instead of freedom itself. This is where debt becomes deeply psychological, because debt magnifies intention. If your intention is emotional escape, debt becomes poison. If your intention is strategic expansion, debt becomes acceleration. Same tool, different consciousness. Imagine giving two people a powerful machine. One learns how it works carefully, studies it, respects it, uses it with precision. The other acts impulsively, ignores instructions, operates emotionally. The machine itself is not the problem. The operator is. Debt works the same way, and this is why financial maturity matters more than financial excitement. The internet glorifies speed, quote 10, quote 11, quote 12. But sustainable wealth is usually emotionally boring at first. Quiet habits, consistent investing, careful decisions, calculated risks, patience. Most people underestimate patience because patience is invisible before results arrive. But patience combined with leverage becomes extremely powerful, because leverage allows disciplined people to multiply time. That is why wealthy people often focus obsessively on acquiring appreciating assets early, not because they want more responsibility, but because they understand compounding. Compounding is one of the quietest miracles in human civilization. Small advantages repeated consistently become massive outcomes over time, and debt can accelerate compounding when attached to productive assets. This is what most schools never explain clearly enough. There is destructive debt, and there is productive debt. Destructive debt drains future energy. Productive debt builds future cash flow. Destructive debt finances temporary emotion. Productive debt finances long-term ownership. Destructive debt weakens flexibility. Productive debt increases leverage. Understanding the difference changes how you see almost everything, because suddenly the question stops being quote 13 and becomes quote 14. That question matters a lot, because financing a depreciating lifestyle and financing an income-producing asset create completely different futures. One extracts from you, the other feeds you. One makes you work harder forever. The other slowly creates systems working on your behalf. And this is where many people finally realize something uncomfortable. Nobody taught them how money actually behaves. Most people were educated to become reliable workers, not strategic owners, reliable earners, not intelligent allocators. They learned how to perform tasks, but not how to make capital move intelligently. And because of that, many spend decades trading time directly for survival without ever building systems larger than themselves. That realization can feel painful at first, but awareness is powerful, because once you see the game clearly, you stop making unconscious decisions. You stop buying emotionally every time insecurity appears. You stop competing with strangers online. You stop financing status symbols for people who are too distracted to remember them anyway. You start asking deeper questions. Questions like, will this purchase strengthen my future or weaken it? Will this debt create income or steal future freedom? Am I buying this from vision or emotion? That last question alone can save somebody years of regret, because emotional spending is rarely about the object itself. It is usually about identity, loneliness, stress, comparison, escape. People buy things hoping to feel more significant, more respected, more secure. But external purchases cannot permanently solve internal instability. Only awareness can. Only discipline can. Only clarity can. And clarity changes spending behavior dramatically. Because once somebody becomes emotionally grounded, flashy consumption loses power. They stop needing constant proof. They stop trying to quote 15. They become more interested in becoming unshakable. There is a huge difference. One seeks admiration. The other seeks freedom. One performs. The other builds. And building requires emotional endurance, especially today, because modern life is engineered to fracture attention constantly. Notifications, advertisements, influencers, comparison loops, endless stimulation. Every platform fighting for emotional reactions. Why? Because distracted people consume more impulsively. A focused mind is harder to manipulate. A calm mind spends differently. That is why emotional discipline may become one of the most valuable financial skills of this generation. Not predicting markets, not finding shortcuts, controlling impulses. Because the ability to delay gratification creates leverage most people never develop. Imagine two individuals earning the same income for 10 years. One increases lifestyle every year. The other increases ownership every year. At first, their lives may look similar. Maybe the spender even looks more successful temporarily. Better vacations, nicer upgrades, more visible luxury. But eventually, something happens. The ownership compounds, cash flow grows, assets appreciate, pressure decreases, options expand. Meanwhile, the lifestyle addict remains trapped maintaining appearances, always needing more income, always one step behind internally, and eventually, exhaustion appears. Because performance is exhausting. Freedom is calming. That is why many wealthy people prioritize cash flow over appearance. Because cash flow buys breathing room, and breathing room changes decision-making. A desperate person makes different decisions than a calm person. A financially cornered person tolerates environments they hate, jobs they hate, relationships they hate, situations they hate, because survival pressure removes options. But ownership restores options slowly. That is why strategic debt can become powerful. Not because debt itself is magical, because leverage allows disciplined people to accelerate ownership before inflation and time make everything more expensive. Think about housing for a moment. Many people spend decades waiting for the quote, _16, while prices rise around them. Others use leverage intelligently, lock into ownership earlier, and allow time to work with them instead of against them. Same economy, different mindset. And mindset always shapes outcomes eventually. Because wealth creation is deeply behavioral, not just mathematical. A person's habits matter. Their emotional triggers matter. Their patience matters. Their environment matters. Even the conversations surrounding them matter. If someone grows up hearing only fear around money, they often fear opportunity itself. If someone grows up seeing only reckless consumption, they normalize instability. And if someone never learns financial awareness, they may spend an entire lifetime reacting emotionally without realizing it. That is why education matters. Not formal education alone. Self-education, observation, curiosity, learning how systems operate. Because once you understand systems, you stop feeling powerless. You begin seeing patterns. You begin recognizing incentives. You begin understanding why banks advertise certain products aggressively, why social media glorifies consumption, why financial literacy is rarely prioritized early, because an unaware consumer is extremely profitable. But an aware individual becomes difficult to manipulate, and awareness changes everything. Suddenly, you stop asking, quote, 17, and start asking, quote, 18. That question creates an entirely different life. Because real wealth is not about impressing people. It is about reducing dependency, reducing panic, reducing fragility, building resilience, building flexibility, building calm. And that process often looks slow at first. Very slow, especially in a world addicted to immediate gratification, but compounding rewards, patience brutally over time. Tiny disciplines repeated for years create outcomes that look impossible to impatient people. That is true financially, emotionally, physically, mentally. A distracted person cannot compound effectively because they constantly reset progress, chasing stimulation. A focused person compounds quietly because consistency becomes identity. And consistency is where leverage becomes dangerous in a good way. Because once disciplined behavior meets leverage, growth accelerates. Faster asset accumulation, faster ownership, faster cash flow expansion, faster opportunity access. That is why the wealthy study risk differently than most people. Most people fear losing money. The wealthy fear losing time. Because money can return, time does not. And leverage, when used responsibly, buys time. Time to grow, time to scale, time to own earlier, time to compound longer. That is the deeper game happening beneath the surface, not greed, not luck. Time. And in the next chapter, we are going to enter one of the most misunderstood ideas in modern finance. Why banks aggressively lend money to people who already have money, while making life harder for people who desperately need help. Once you understand that paradox, You will begin seeing the financial system through completely different eyes. Chapter 3. There is a strange truth hiding in plain sight. The people who need money the most often struggle hardest to access it, while the people who already have money are constantly offered more, higher credit limits, lower interest rates, exclusive financing, private banking services, access. And at first glance, it feels unfair, because it is. But it is also revealing, because the financial system rewards perceived stability more than effort. And once you understand that, you stop taking the system personally and start studying it strategically. Banks are not emotional institutions. They are mathematical institutions. They do not lend primarily based on need. They lend based on probability, probability of repayment, probability of stability, probability of asset growth, probability of long-term profit. That is why wealthy individuals often borrow at extremely favorable terms while struggling families get punished with high interest debt. One borrower is perceived as low risk, the other as survival-based. And survival-based behavior creates volatility. This is where emotional control becomes financial power, because calm people make different decisions than desperate people. A desperate person focuses on immediate relief. A strategic person focuses on long-term positioning. And positioning changes everything. The wealthy understand that capital flows toward stability, toward systems, toward predictable outcomes. That is why many rich individuals spend years strengthening their financial profile before making massive moves, not because they lack ambition, because they understand leverage becomes more powerful when trust increases. Trust from banks, trust from investors, trust from markets, trust from networks. Money moves faster toward people perceived as disciplined. That is the uncomfortable reality. And once you realize this, something shifts internally. You stop viewing financial growth as only earning more. You begin viewing it as becoming more structurally trustworthy, more stable, more consistent, more predictable, because predictability creates access, and access changes entire futures. Imagine two individuals. One spends every dollar emotionally the moment it arrives. The other builds discipline slowly, pays obligations consistently, protects reputation, learns financial systems, builds credibility. At first, the difference may seem invisible, but years later, one person can access opportunities the other cannot even see, not because they are smarter, because they became structurally reliable. That reliability becomes leverage itself, and this is something many people never fully understand. Wealthy individuals often use debt because preserving liquidity matters. Let's slow down and unpack that carefully. Most people think paying cash for everything is always superior, and emotionally, it feels safer. No payments, no obligations, no interest. But strategic investors often think differently, because when they use cash entirely on one purchase, that cash loses flexibility. It can no longer pursue other opportunities. It can no longer act as reserve capital. It can no longer move. And movement matters in wealth creation. Liquidity matters. Having accessible capital matters, especially during uncertain economic periods. That is why many sophisticated investors would rather finance certain assets while allowing their remaining capital to continue producing returns elsewhere. This is one of the core concepts average consumers rarely study deeply enough. The wealthy do not always optimize for ownership alone. They optimize for efficiency, for flexibility, for strategic positioning. And once you understand that, You stop seeing debt as purely emotional. You begin seeing it as structural, a tool, nothing more, nothing less. A hammer can build a house or destroy a window. The tool is neutral. The operator determines the outcome, and this idea frightens many people because it demands responsibility, real responsibility, not motivational quotes, not fantasies, discipline, study, patience, emotional restraint, because leverage magnifies behavior, and behavior always reveals identity eventually. That is why some lottery winners go broke rapidly, while disciplined builders quietly become wealthy over decades. Money amplifies patterns already present. If somebody lacks boundaries, more money exposes it. If somebody lacks self-worth, more money often increases destructive consumption. If somebody lacks clarity, leverage accelerates confusion. But disciplined people, focused people, patient people, they use leverage to multiply productive systems. That difference creates entirely different outcomes from similar opportunities. Now, here is something most people never hear early enough. Wealth is less about income than it is about margin, the space between what comes in and what goes out. That space determines flexibility, and flexibility determines resilience. A person earning modest income with strong margins may be far healthier financially than somebody earning enormous income while trapped under crushing lifestyle pressure. Because income can disappear, but habits remain. This is why some celebrities go bankrupt, why athletes lose fortunes, why high-income professionals still feel financially anxious. Because they expanded lifestyle faster than structural stability. And modern culture encourages exactly that behavior. Upgrade immediately. Celebrate immediately. Display immediately. Consume immediately. There is almost no cultural reward for restraint anymore, but restraint builds power quietly, slowly, relentlessly, and the wealthy often understand this deeply. That is why many rich individuals look strangely disciplined despite massive resources. Not cheap, disciplined. There is a difference. Cheapness fears spending. Discipline controls spending. Cheapness comes from scarcity. Discipline comes from awareness. A disciplined, wealthy person understands every dollar has potential energy. Every dollar can either disappear or become a worker. And once you begin seeing money as workers instead of trophies, your relationship with spending changes forever. You stop asking only, quote, 19, and start asking, quote, 20. That question creates maturity, because mature financial thinking requires sacrificing temporary emotional highs for long-term structural freedom. And that is difficult, especially when surrounded by people living emotionally, especially in digital culture where appearances move faster than reality, especially when insecurity whispers constantly. Quote, 21, quote, 22, quote, 23, quote, 24. But emotional reward cycles often create long-term pressure, and pressure quietly steals peace. This is why many wealthy individuals become obsessed with reducing unnecessary obligations, not because they hate life, because they value mental clarity. Every unnecessary debt payment consumes attention. Every impulsive obligation reduces flexibility. Every emotional purchase creates hidden weight. And eventually people begin realizing something powerful. Financial peace is emotional peace, not total peace, but significant peace. The ability to breathe, the ability to think long term, the ability to make decisions from vision instead of panic. That is priceless. And strategic debt, surprisingly, can support that freedom when attached to productive systems. This is where people become confused because they assume all debt equals stress. Not necessarily. Bad debt creates pressure because nothing productive offsets it. Good leverage attached to cash-producing assets behaves differently. The asset contributes. The system helps carry the obligation. The debt supports growth instead of draining survival. Again, same tool, different structure, and structure matters more than emotion. Let's use a simple example. Imagine someone finances an expensive luxury vehicle primarily for image. The car loses value rapidly. Payments remain fixed. Insurance remains high. Maintenance grows. The asset extracts money monthly while declining in value. Now imagine another individual uses leverage to acquire a modest rental property producing cash flow. Tenants contribute to payments. The asset potentially appreciates. Tax advantages may exist. Equity slowly grows. One debt weakens flexibility. The other may strengthen it over time. That is why financial education matters so deeply. Without education, people treat all borrowing emotionally. With education, people learn discernment, and discernment changes destinies. Because the wealthy are not simply, quote, 25. They often think differently about time, risk, and opportunity, especially opportunity. Most people ask, quote, 26. Strategic thinkers ask, quote, 27. That question changes behavior dramatically because waiting endlessly also carries risk. Avoiding ownership entirely carries risk. Inflation carries risk. Lost years carry risk. Missed compounding carries risk. Fear itself carries risk. And fear silently controls millions of financial decisions. Fear of looking foolish. Fear of responsibility. Fear of losing. Fear of uncertainty. But the wealthy often learn to manage fear differently. Not eliminate it. Manage it. Study it. Move carefully through it because every meaningful opportunity contains uncertainty. No major business move comes with guarantees. No investment comes with total certainty. No ownership journey removes all risk, but disciplined education reduces unnecessary risk dramatically. That is why knowledge compounds faster than motivation. Motivation fades, knowledge remains useful, and the more you understand systems, the calmer you become. Because clarity reduces panic. Panic creates terrible decisions, especially financially. Panic selling, panic borrowing, panic spending, panic lifestyle inflation. Emotion destroys strategy. That is why emotional intelligence may be one of the most underrated wealth skills on earth. The ability to remain calm while others react emotionally creates enormous long-term advantage in markets, in business, in negotiations, in life. And perhaps nowhere is this more visible than during economic crises. Watch carefully during recessions. Many panic, many freeze, many collapse emotionally. But disciplined individuals with liquidity, patience, and strategic awareness often position themselves for future growth during chaos. Why? Because crises create discounts, opportunities, transfers of ownership, and those prepared emotionally can move while others remain paralyzed. This is one reason the wealthy often become wealthier during uncertainty. Not because chaos is pleasant, because preparation creates optionality, and optionality is one of the greatest forms of power in existence. The ability to move, to choose, to act, to adapt, that is real wealth, not applause, not status, not temporary appearances, options. And in the next chapter, we are going deeper into one of the most dangerous psychological traps in modern life. Why many people unconsciously stay poor, trying to look successful, and why true builders often look quote, _28, before they quietly become unstoppable. Dear viewer, we would really be grateful if you could share your ideas on how we can improve our videos in the comments. Thank you very much. Chapter 4. One of the most expensive addictions in the modern world is not alcohol, not gambling, not even luxury itself. It is the addiction to appearing successful before becoming stable, and millions of people are trapped inside it without realizing it, because appearance gives immediate emotional rewards: approval, attention, validation, a temporary feeling of significance. But true wealth often grows invisibly for years. That is why many builders look ordinary in the beginning, while performers look rich immediately, and society constantly confuses the two. The performer rents status. The builder acquires control. One is optimized for attention, the other for freedom, and freedom takes longer to recognize from the outside. That is why patience has become a superpower, because most people cannot tolerate looking __, quote _2, 9, _ long enough to become exceptional. They need evidence immediately. They need external proof immediately. They need applause immediately. So they finance lifestyles they have not structurally earned yet. And debt becomes theater, a performance, a costume, a silent agreement to trade future peace for present image. This is why some people with high incomes still feel financially suffocated, because expensive lifestyles create invisible prisons. A luxury apartment can become pressure. An expensive car can become anxiety. Designer habits can become dependence. And suddenly, success no longer feels like freedom. It feels like maintenance, constant maintenance, the pressure to sustain an identity. That pressure exhausts people emotionally, because deep down, many know they are not building ownership. They are maintaining appearance, and appearance is infinitely hungry. There is always a newer version, a bigger upgrade, a more impressive lifestyle. Comparison never ends, because comparison is designed not to end. Modern marketing depends on dissatisfaction. Think carefully about that. Entire industries profit from making people feel incomplete, not enough, behind, outdated, less important. Because insecure people consume faster. Secure people think longer. And thinking interrupts impulse. That is dangerous for industries built on emotional spending. This is why attention is constantly manipulated. Algorithms study insecurity. Advertisements target emotional gaps. Platforms monetize comparison. And many people spend their lives unconsciously reacting instead of intentionally building. That reaction becomes financial fragility over time. Not because they are incapable, because they are overstimulated. Distracted people rarely build deeply. Focused people do. And wealth often rewards focus more than excitement. This is why many truly wealthy individuals become obsessed with simplicity. Not because simplicity looks glamorous, because simplicity protects clarity. The fewer unnecessary obligations somebody carries, the more strategic they can become. That matters enormously, because strategic thinking requires mental space, and debt attached to ego consumes mental space aggressively. Every unnecessary payment steals attention. Every emotionally driven obligation creates low-level stress. Every impulse purchase competes against future flexibility. Eventually, people wake up surrounded by expensive symbols while internally feeling trapped. That contradiction is becoming more common every year, especially among younger generations pressured by digital comparison at unprecedented levels. Imagine waking up every morning already psychologically behind people you have never met. That is what social media quietly creates, a global comparison machine. And comparison accelerates emotional spending. People start financing identities instead of futures, borrowing not for opportunity, but for perception. That is one of the fastest ways to remain financially dependent forever, because perception never produces cash flow. Assets do, ownership does, systems do, skills do, patience does. And this is where emotionally mature people begin separating themselves from the crowd. They stop asking, quote, 30, and start asking, quote, 31. That question changes behavior profoundly, because resilience becomes more attractive than image. Stability becomes more attractive than applause. Ownership becomes more attractive than validation. And ironically, that mindset often creates real wealth eventually, quietly, because wealth creation is less dramatic than most people imagine. It is usually repetitive, disciplined, measured, often boring. A person investing consistently for years rarely looks exciting. A person learning financial systems slowly rarely looks glamorous. A person quietly building ownership rarely gets celebrated early. But compounding transforms ordinary disciplined behavior into extraordinary outcomes over time. That is the part impatient people miss. Compounding rewards consistency more than intensity. A small disciplined action repeated for 10 years becomes enormous. A reckless emotional action repeated for 10 years becomes destructive, and debt magnifies whichever path someone chooses. That is why emotional awareness matters before leverage. Without awareness, leverage becomes gasoline poured onto instability. With awareness, leverage becomes acceleration. And acceleration changes lives. This is why many wealthy individuals become extremely protective of their environment. Who they listen to, who influences them, who shapes their perception of success. Because environments normalize behavior. If someone spends years surrounded by people obsessed with appearances, overspending begins feeling normal. If someone spends years surrounded by disciplined builders, patience begins feeling normal. Human beings adapt emotionally to their environment constantly. That is why changing your financial life often requires changing what influences your mind daily. The conversations, the media, the habits, the priorities. Everything compounds, even thinking, especially thinking. A person who constantly thinks short-term eventually behaves short-term. A person who trains themselves to think decades ahead behaves differently immediately. They buy differently, borrow differently, spend differently, work differently, react differently, and over time, those differences become massive because the future is built quietly in ordinary decisions, not dramatic moments alone. One purchase, one investment, one discipline, one avoided impulse, one productive habit repeated consistently. That is how financial identities are formed, not overnight, over patterns. And patterns are emotional before they become financial. This is why some people sabotage themselves repeatedly, even after increasing income. Because unresolved insecurity keeps demanding visible rewards. They work hard, then spend emotionally to soothe exhaustion, then work harder to maintain the spending, then feel trapped, then spend again seeking relief. A cycle, an exhausting cycle. And many never realize they are financing emotional instability. This is where self-awareness becomes financial freedom. The moment somebody pauses and asks honestly, everything can begin changing, because sometimes the desire for luxury is not about the object. It is about wanting respect, wanting significance, wanting proof of worth, wanting to feel safe. But external purchases cannot permanently create internal peace. That is why wealthy people who lack emotional grounding often remain miserable despite enormous resources. Money amplifies experience. It does not automatically heal identity. And this is why true wealth must become internal before it becomes external. Otherwise, every financial gain simply creates larger emotional chaos. The wealthy who last decades understand this deeply. That is why many become increasingly calm instead of increasingly flashy, because eventually they realize peace is more valuable than performance, and peace requires margin. Margin financially, margin emotionally, margin mentally, space to think, space to adapt, space to survive uncertainty. Debt that destroys margin becomes dangerous. Debt that increases productive capacity can become transformative. Again, same tool, different purpose, and purpose determines outcome. Imagine using leverage to acquire a skill-producing business, or productive real estate, or scalable systems, or education, increasing long-term earning capacity. That debt behaves differently than borrowing for temporary validation. One creates future opportunity. The other creates future pressure. This distinction may sound obvious intellectually, but emotionally, many people still struggle with it daily. Because emotional spending feels rewarding immediately. Discipline rarely does. Not at first. At first, discipline feels invisible, lonely sometimes, especially when surrounded by people chasing appearances aggressively. But years later, discipline becomes freedom, and emotional impulsiveness becomes regret. This is why long-term thinking is one of the rarest forms of intelligence in modern life. Most people are conditioned toward immediacy, immediate pleasure, immediate reaction, immediate consumption. But wealth often belongs to those who can emotionally tolerate delayed outcomes, who can plant without immediate applause, who can build without immediate recognition, who can remain patient while others panic. And patience becomes incredibly powerful when combined with leverage, because leverage accelerates whatever foundation already exists. A weak foundation collapses faster under pressure. A strong foundation scales faster under opportunity. That is why the wealthy often focus obsessively on fundamentals: cash flow, liquidity, ownership, systems, relationships, skills. Not because fundamentals are exciting, because fundamentals survive storms, and storms always come eventually. Economic storms, personal storms, market storms, life storms. And during those storms, appearances lose value quickly, but ownership matters. Liquidity matters. Discipline matters. A calm nervous system matters. This is why many financially disciplined people appear quote _33 temporarily while becoming structurally stronger underneath the surface. They are building foundations invisible to distracted observers, and foundations rarely look impressive while being built. But once compounding begins accelerating, everything changes, because eventually there comes a moment where disciplined builders stop needing to perform entirely. The systems begin carrying them, the assets begin supporting them, the ownership begins protecting them. And suddenly, the person who once looked quote 34 becomes extraordinarily difficult to destabilize. That is real power, not temporary status, stability. And in the next chapter, we are going to enter one of the deepest truths about wealth creation: why the rich obsess over assets while most people obsess over income, and why understanding that difference can completely transform the trajectory of a life. Chapter 5. Most people spend their lives trying to increase income. The wealthy spend their lives trying to increase ownership. That difference seems small at first, but over decades, it creates completely different realities. Because income depends on effort. Assets can continue producing even when effort pauses. And once somebody understands that deeply, the entire relationship with work begins changing. This is one of the hardest truths for modern workers to accept. You can earn a very high income and still remain financially fragile if everything depends on your constant presence, your constant energy, your constant time, your constant attention. Because if income stops, the entire structure collapses. That is not freedom. That is dependency at a higher level. And millions of people quietly live inside that dependency while believing they are successful. Exhausted professionals, burned out entrepreneurs, high earners with no margin, people making impressive money while internally terrified of slowing down because they built lifestyles requiring constant performance. The wealthy often think differently, not always immediately, but eventually. They begin asking one powerful question repeatedly. Quote 35. That question creates assets, businesses, investments, systems, intellectual property, cash-flowing structures, ownership, because ownership changes the relationship between time and money, and time is the real currency underneath everything, not dollars, not status, time. The ability to control your mornings, the ability to think without panic, the ability to spend time with family without financial terror running underneath every moment, the ability to choose. That is what people are truly seeking, not luxury itself. Freedom. Luxury is often just the symbol people associate with freedom. But symbols and reality are not always the same thing. A rented lifestyle can look free while being emotionally suffocating. Meanwhile, somebody quietly building assets may appear ordinary while becoming extraordinarily powerful underneath the surface. That is why wealthy builders often focus less on income and more on acquisition. Acquisition of systems, acquisition of productive assets, acquisition of leverage, because every productive asset reduces dependency slightly. Every asset becomes another worker, another stream, another support structure, and eventually those structures begin changing life itself. This is the compounding effect most people underestimate. One asset may not transform life immediately, neither will two or three, but over years, the accumulation changes everything. That is why patience matters so much, because compounding initially feels slow, painfully slow sometimes. And modern culture has almost no patience left. People want visible transformation immediately. They want dramatic wealth quickly. They want financial certainty overnight. But sustainable wealth is usually built through long periods of invisible progress. Quiet investing, quiet learning, quiet ownership, quiet discipline, and silence feels uncomfortable in a world addicted to stimulation. That is why many people sabotage compounding before it can fully work. They get impatient, distracted, emotionally reactive. They abandon systems too early, sell too early, spend too early, celebrate too early. And emotional inconsistency interrupts long-term momentum constantly. The wealthy who last generations understand something critical. Stability creates scale, not excitement. Stability, because stable systems survive long enough to compound massively. That is why many wealthy families become obsessed with preserving capital, not merely earning it, because they understand protecting assets matters as much as acquiring them. This is where debt becomes incredibly strategic, because leverage allows disciplined individuals to acquire appreciating or productive assets before they could purchase them outright with cash. That matters enormously over time, especially when inflation continuously raises prices. The wealthy understand inflation differently than most people. Most people experience inflation emotionally. Groceries feel more expensive. Housing feels more expensive. Life feels harder. The wealthy experience inflation structurally. They understand cash sitting idle loses purchasing power over time, which means ownership often becomes more valuable than passive saving alone. This is one reason productive debt can become powerful. If an asset grows faster than the cost of borrowing, leverage accelerates wealth creation. That concept changes how sophisticated investors think entirely. They stop asking and begin asking, that is a completely different conversation, a completely different mindset. And mindset shapes behavior more than intelligence alone, because many intelligent people remain financially trapped due to emotional habits, while less academically gifted individuals quietly build wealth through consistency and discipline. That reality surprises people. But financial success is heavily behavioral, emotional, habit-based, not merely intellectual. This is why some highly educated people still make destructive financial decisions repeatedly. Knowledge without emotional control becomes fragile under pressure. And pressure reveals everything, especially financially. A person under pressure shows their true relationship with money quickly. Do they panic, overspend, freeze, avoid reality, seek short-term relief? Or do they remain calm, strategic, adaptive? That difference determines long-term trajectories more than most people realize. Because wealth creation is not only about opportunity, it is about emotional regulation over time. And emotional regulation becomes increasingly rare in modern culture. Everyone is overstimulated, overexposed, emotionally pulled in every direction constantly. Fear headlines, a market panic, comparison loops, endless digital noise, all of it encouraging reactive behavior. But reactive people rarely build durable wealth. Focused people do, because focus protects consistency, and consistency allows compounding to work uninterrupted. That is why wealthy individuals often protect their attention aggressively. Attention directs behavior, behavior shapes outcomes, and outcomes compound. Everything compounds eventually, even distraction. A distracted decade destroys more futures than lack of intelligence ever will, because distraction interrupts depth, interrupts mastery, interrupts ownership building, interrupts strategic thinking. And modern culture monetizes distraction aggressively. Why? Because distracted people remain consumers. Focused people become builders. Builders become harder to manipulate, harder to pressure emotionally, harder to sell unnecessary status to. That is why emotional independence matters financially. The less someone needs external validation, the easier it becomes to make rational long-term decisions. And rational long-term decisions create wealth quietly, one disciplined choice at a time. This is why the wealthy often appear patient beyond what average people understand, because they are thinking differently about time itself. Most people think month to month. Some think year to year. Builders often think decade to decade. That changes behavior dramatically. Imagine planting trees knowing you may not sit under their full shade for years. That requires maturity, vision, restraint, faith in process, and debt used strategically can help accelerate that planting process, especially when attached to productive assets. But this is where many people become reckless. They hear, quote, 38 and imagine easy wealth. Dangerous mistake, because leverage without discipline destroys people faster than almost anything else financially. The wealthy who use leverage effectively usually pair it with education, risk management, liquidity, and patience, not fantasy, not gambling mentality, not desperation. They calculate carefully, because surviving matters more than appearing bold. A disciplined investor survives long enough to benefit from compounding. An emotional investor often collapses trying to become rich too quickly. That distinction matters enormously, especially in today's environment where people are constantly tempted by unrealistic expectations. Fast flips, easy money, instant wealth. But sustainable wealth rarely behaves dramatically. It behaves quietly, systematically, like water slowly reshaping stone. And this is why understanding assets becomes life-changing, because assets produce. That is their nature. Whether through appreciation, cash flow, royalties, dividends, or business systems, assets generate future potential. Liabilities extract. Assets produce. Liabilities consume. The wealthy obsess over increasing production, not consumption. And once somebody truly understands that distinction emotionally, spending patterns begin changing automatically. They start thinking differently before purchases. They become slower, more intentional, more strategic, not fearful. Aware, because awareness changes financial behavior naturally. An aware person recognizes every purchase carries opportunity cost. Every dollar directed one way cannot simultaneously strengthen another area. That realization creates discernment, and discernment creates power. Because suddenly, someone stops reacting emotionally to every temptation. They start evaluating, questioning, thinking ahead. That mental shift alone separates builders from performers. The performer asks, quote, 39. The builder asks, underscore, quote, underscore 40, underscore, and production compounds into freedom over time. That is why wealthy people often prioritize acquiring boring assets before exciting luxuries. Because boring assets eventually fund exciting lives. But people trying to skip the boring phase often trap themselves financially. They want visible rewards before structural foundations exist. And foundations matter, especially during uncertainty. The world is changing rapidly. Economies shift. Industries evolve. Artificial intelligence transforms labor markets. Costs rise. Stability becomes more valuable every year. And ownership creates stability in ways income alone often cannot. Because ownership can continue functioning while individuals rest, adapt, or pivot. That is real leverage, not avoiding work forever. Building systems larger than direct effort alone. And debt, when used intelligently, can accelerate that transition. but only if emotional discipline exists first, always first. Because the greatest financial danger is not lack of opportunity. It is emotional impulsiveness combined with leverage. That combination destroys futures, while disciplined leverage quietly builds empires. And in the next chapter, we are going to explore one of the deepest hidden differences between wealthy thinkers and average consumers. Why the rich often buy cash flow first and luxury second, while most people reverse the order and accidentally delay freedom for decades. We're so glad you decided to watch our video. We're also really curious to know which cities around the world are watching our videos. Could you let us know which city, or at least which country, you're from? We always read every comment under our videos carefully. Thank you. Chapter 6. Most people buy rewards first and freedom later. The wealthy often reverse the order. And that reversal changes everything. Because buying luxury before building cash flow creates pressure. Buying cash flow before luxury creates options. That is one of the most important financial distinctions a person can ever understand. But modern culture trains people backward. It teaches consumption before construction, appearance before infrastructure, lifestyle before leverage. So people work hard, earn more, then immediately upgrade visible life. A nicer car, a more expensive apartment, bigger subscriptions, more status-driven spending, and slowly, without realizing it, every raise becomes another chain. More obligations, more maintenance, more pressure. Instead of buying freedom, they buy heavier survival. This is why so many high-income individuals still feel trapped, because income alone does not create freedom. Cash flow does. Ownership does. Margin does. A person earning enormous money while carrying massive obligations may actually have less freedom than someone earning modestly with strong assets and low pressure. That truth surprises many people, because society glorifies income loudly while barely discussing structure. But structure determines sustainability, always. And wealthy individuals who last decades understand this deeply. They know the order matters. Cash flow first, luxury second, systems first, symbols second, foundation first, performance later. This is why many wealthy builders appear surprisingly restrained early on. They are not trying to look rich immediately. They are trying to become difficult to destabilize permanently. Huge difference. One mindset seeks attention, the other seeks control, and control creates peace. Imagine two people receiving the same increase in income. The first immediately expands lifestyle. The second acquires another productive asset. Years later, their realities diverge dramatically. The spender requires constant income growth to maintain an image. The builder experiences increasing flexibility because systems now support life alongside effort. That is how wealth quietly compounds, not through one dramatic moment, but through repeated prioritization of production over performance. And this is where debt becomes incredibly revealing, because debt exposes priorities. A loan attached to consumption says one thing. A loan attached to production says another. One says, I want to feel wealthier now. The other says, I want to become stronger later. That distinction shapes entire futures. The wealthy understand something emotionally difficult for many people to accept. Temporary sacrifice often creates permanent flexibility. But modern culture hates sacrifice, hates waiting, hates delayed gratification. Everything is engineered for immediacy now. Fast delivery, fast entertainment, fast validation, fast dopamine. And because of that, many people lose the ability to tolerate slow progress. But slow progress is where real power often lives. A tree does not explode into existence overnight. A city is not built in a weekend. A powerful reputation is not formed in a month. And durable wealth is rarely created instantly either. It compounds quietly, while impatient observers chase excitement elsewhere. This is why wealthy individuals often become obsessed with process instead of emotion. They focus on systems, habits, consistency, allocation, risk management, because emotional decision-making becomes dangerous at scale, especially with leverage involved. Imagine somebody emotionally unstable suddenly gaining access to large amounts of borrowed capital. Disaster becomes likely, not because leverage is evil, because amplified instability creates amplified consequences. That is why emotional discipline always matters more than financial ambition. Ambition without discipline becomes self-destruction eventually. And many people experience this cycle repeatedly. They chase visible success aggressively, then collapse under the pressure required to maintain it, not because they lacked intelligence, because they lacked structure. Structure protects people from themselves. Budgets, boundaries, long-term thinking, cash reserves, intentional spending, strategic leverage. All of these reduce emotional chaos, and emotional chaos quietly destroys financial futures, especially today, because modern life keeps people psychologically overstimulated. Everything pushes urgency. Act now. Limited time. Don't miss out. Everyone else already has it. Fear of missing out has become an economic engine, and emotionally reactive people become easy targets, easy to pressure, easy to influence, easy to manipulate into consumption. But disciplined people interrupt the cycle. They pause, think, evaluate. That pause alone can change a life. Because financial mistakes are often emotional decisions disguised as logical ones. A person convinces themselves a purchase makes sense emotionally first. Logic usually arrives afterward as justification. This is why awareness matters so deeply. An aware person catches emotional impulses before they become financial damage. They recognize insecurity, comparison, stress spending, validation seeking. And over time, awareness creates control. Control creates stability. Stability creates leverage. Leverage creates opportunity. Everything connects. And wealthy individuals understand these connections better than most. That is why many rich people look unusually calm around money. Not because they never experience pressure, because they built structures reducing unnecessary chaos. Cash flow reduces panic. Ownership reduces vulnerability. Liquidity reduces desperation. And desperation is expensive, very expensive. Desperate people accept terrible deals, terrible jobs, terrible terms, terrible environments, because survival pressure removes negotiating power, but assets restore negotiating power slowly. Every productive asset becomes another layer of support beneath life, another pillar, another source of resilience. And resilience changes human behavior profoundly. A resilient person thinks longer term, acts calmer, negotiates better, sleeps better. That matters more than most people realize, because a regulated nervous system makes better financial decisions than a panicked one. And panic is everywhere now. Economic fear, job uncertainty, inflation pressure, comparison pressure, identity pressure. Many people are emotionally exhausted before they even begin thinking strategically about money. That exhaustion fuels impulsive behavior. Treat yourself. You deserve it. Enjoy life now. And yes, life should be enjoyed, absolutely. But there is a huge difference between intentional enjoyment and unconscious escapism. One nourishes life. The other numbs discomfort temporarily while increasing future pressure. The wealthy who sustain success long-term usually understand this balance. They do not necessarily avoid pleasure. They avoid self-destructive financial patterns. Because they understand freedom itself is pleasurable, deeply pleasurable. The ability to wake up without panic, the ability to choose projects intentionally, the ability to say no, the ability to survive downturns calmly, that level of peace becomes more attractive than flashy consumption eventually, especially after maturity deepens. This is why many wealthy individuals gradually become less performative over time. They stop needing external validation as intensely because internal security changes priorities. A secure person buys differently than an insecure person. An insecure person often buys to communicate value. A secure person buys based on utility, enjoyment, or strategic value, not identity desperation. That emotional shift changes everything financially. And once someone experiences the peace of increasing ownership, performative spending begins losing emotional power naturally, because real freedom feels better than temporary applause. Always. This is why wealthy builders often protect their monthly obligations carefully. They understand every recurring expense competes against future flexibility. Every unnecessary financial burden steals optionality, and optionality is one of the highest forms of wealth. The ability to pivot, adapt, rest, move, invest, respond. Opportunities favor flexible people. Rigid people break easier under change. And the modern world is changing rapidly. Entire industries are shifting. Technology evolves constantly. Economic uncertainty rises globally, which means flexibility becomes increasingly valuable every year. This is another reason strategic debt matters. When used intelligently, leverage can accelerate ownership before opportunity becomes unreachable. Real estate, businesses, scalable systems, productive education, assets often become more expensive over time due to inflation and demand. Waiting indefinitely can carry hidden costs too. That is why wealthy individuals evaluate debt differently. They ask, what does this allow me to control today that may become far more difficult later? That question reframes leverage entirely, because leverage is ultimately about accelerating access to ownership, access to opportunity, access to compounding. But acceleration without discipline becomes catastrophe. Always. That is why education matters so much before leverage. Study before scale. Awareness before expansion. Structure before risk. Because leverage magnifies everything already present internally. A disciplined person becomes stronger. An impulsive person becomes more unstable. And eventually, everyone reveals their relationship with money through patterns, not intentions. Patterns, repeated behavior tells the truth. And this is why wealthy individuals often obsess over habits more than dramatic moves. Because habits create trajectories. Trajectories create futures. A small disciplined habit repeated for years can create enormous structural change. A small destructive habit repeated for years can quietly destroy an entire future. And debt amplifies both directions. That is why financial maturity is not about looking rich. It is about becoming resilient enough that external chaos no longer controls your decisions. That is true wealth. Not applause, not logos, not attention. Control. And in the next chapter, we are going to explore one of the most powerful hidden concepts in modern wealth creation: why inflation quietly punishes savers while often rewarding owners, and why understanding this dynamic completely changes how the wealthy think about money, debt, and time itself. Chapter 7. Most people believe saving money alone will make them financially safe. The wealthy understand something far more uncomfortable. Money sitting still slowly dies, not dramatically, quietly, silently, year after year through inflation. And inflation may be one of the most misunderstood forces in modern life, because inflation is invisible enough that most people adapt emotionally before they fully understand what is happening structurally. Prices rise, housing rises, food rises, education rises, healthcare rises. Everything gradually becomes more expensive while salaries often struggle to keep pace. And people feel it emotionally before they understand it intellectually. Life starts feeling heavier, harder, more compressed. That is inflation quietly reducing purchasing power. Now think carefully about this. If cash loses value over time, then simply storing money without strategy can slowly weaken financial position. This realization changes how wealthy people think entirely, because wealthy individuals do not merely ask, "How much money do I have?" They ask, "What is my money doing while time passes?" That question creates ownership behavior, asset behavior, leverage behavior, because assets often move differently during inflationary periods than idle cash. Real estate may appreciate. Businesses may raise prices. Stocks may increase over long periods. Productive systems continue adapting. But inactive money loses strength silently. This is why the wealthy obsess over productive allocation, not hoarding alone, movement, strategy, positioning. And this is where debt becomes deeply connected to inflation, because inflation changes the real cost of debt over time. Most people never study this carefully enough. Imagine borrowing money today at fixed terms while inflation continues increasing prices and wages over the next decade. Over time, the future dollars used to repay that debt may actually hold less purchasing power than the dollars originally borrowed. That idea changes everything, because suddenly, leverage attached to appreciating assets becomes extremely powerful. This is one reason wealthy investors often rush toward ownership during inflationary periods while average consumers panic. The wealthy understand inflation punishes passivity. Ownership often adapts. That is why so many rich individuals aggressively acquire assets during uncertain economic environments. Not because uncertainty feels comfortable, because they understand how systems behave long-term, and long-term thinking separates builders from reactors. Reactors respond emotionally to headlines. Builders study structural patterns beneath the noise. That difference creates enormous advantage over decades, especially because modern media monetizes fear aggressively. Fear keeps people reactive. Fear keeps people consuming headlines. Fear clouds strategic thinking. And fear-driven people often freeze financially. They delay learning, delay ownership, delay action, delay investing. Meanwhile, inflation continues moving quietly in the background every single day. That sentence alone can redirect an entire life. And remember this too: the goal is not to become richer than everyone else. The goal is to become difficult to control, difficult to pressure, difficult to destabilize, calm, focused, free. That is the highest form of wealth available in the modern world. If this audiobook resonated deeply with you, leave a comment sharing the single lesson that shifted your perspective the most. Not because comments are just engagement, because speaking a truth out loud often strengthens commitment internally. And if there is someone in your life trapped inside financial fear, emotional spending, distraction, or survival mode, share this audiobook with them. Sometimes one conversation changes a trajectory. Sometimes one shift in awareness changes generations. And subscribe if you want more long-form audiobooks on discipline, wealth psychology, emotional mastery, focus, self-control, modern freedom, and building a life that actually feels meaningful in a distracted world. Because this journey was never just about debt. It was about consciousness, about understanding systems instead of being controlled by them, about reclaiming ownership over your attention, your money, your emotions, and ultimately, your life itself. And now, as this audiobook closes, remember the one truth tying everything together. The rich become richer, not because they are lucky, but because they learned how to think long-term in a world addicted to short-term emotion. Learn that skill, and your entire future changes. Quietly, powerfully, forever.